Right now, artificial intelligence isn't just a technology trend. It's turning into one of the biggest investment waves we've ever seen. Companies are spending billions on AI data centers. AI stocks keep breaking new records, and some analysts are warning that we might be heading straight into the next tech bubble. So, which one is it? A massive opportunity or a ticking time bomb? Hi everyone, I am Ersin. I am a certified public accountant with a master's degree in finance. Today, I'm going to share some eye-opening insights from a financial expert's perspective. The kind of things you won't hear anywhere else. Let's start. Section 1. The money behind AI. Who is spending billions? Let's start with the biggest signal in the market right now, money flow. Over the past few months, US tech giants like Microsoft, Google, Meta, Amazon have massively increased their AI-related capital expenditures. We are talking tens of billions going directly into data centers built specifically for AI. And according to JP Morgan's latest market note, this spending is not slowing down, it's accelerating. Why does this matter for you as an investor? Because when tech giants make multi-year capex commitments, it usually shapes the entire market for the next decade. This brings us to our next point. Section 2. The real winners. Not who you think. Most people think AI investing means buying companies that use AI. But the real winners right now are the companies that build the infrastructure behind AI. I am talking about GPU manufacturers, data center builders, networking and storage companies, semiconductor suppliers. For example, Nvidia is still dominating the high-end chip market. But companies like Supermicrocomputer, Broadcom and even old-school data center REITs are seeing explosive demand. This is why many analysts call AI infrastructure the pickaxe and shovel play. The people selling tools during the gold rush always get rich, no matter who finds gold. But if you don't want to pick individual stocks, don't worry, there is another option. Section 3. What about AI ETFs? AI-focused ETFs have been quietly crashing the market. Some examples: the Rothschild Generative AI and Technology ETF reported one of the highest return this year. Semiconductor ETFs like 1X, SMH have also surged thanks to AI hardware demand. For long-term investors, ETFs offer something crucial during hype cycles: diversification. Instead of guessing which AI company will dominate, you spread your risk across the entire ecosystem. But before you jump in, we need to talk about the elephant in the room. Section 4. Are we in an AI bubble? Let's be honest, hype is real. Really real. Some analysts, especially in traditional finance media, say the current AI valuations are unsustainable. They compare it to the dot-com era, where excitement was high, earnings were, well, imaginary. And there are the warning signs. Price-to-sale ratios at historic highs, massive investor inflows in very short periods, companies adding the word AI to their vision statements just to jump stock price. Even Bank of America's fund managers survey shows that many professionals believe tech stocks are becoming overvalued. So should you panic? Not necessarily, because this next part is where things get interesting. Section 5. How big investors are playing the AI boom. Hedge funds and institutional investors aren't avoiding AI. They are learning into it, but strategically. Many funds now use machine learning models for portfolio management. Others are buying infrastructure-heavy companies instead of speculative AI startups. In other words, pros are investing in AI, but they are doing it in the least risky way possible. Section 6. So, what should you do? If you are thinking long-term, here's a simple framework. 1. Avoid FOMO. Don't buy just because AI is trending. 2. Focus on infrastructure, chips, data centers, networking. These survive even hype fades. 3. Use ETFs if you want stability. They remove single stock risk. And 4. Treat AI innovation as a long game. This industry is still in early innings. AI investments are exciting, but disciplined strategies always beat emotional trading. And finally, final thought. So, here's the real question. Or is this just the beginning of the next technological revolution? In my personal view, AI will be volatile in the short term, but it's going to touch nearly every part of our lives in the long run. What do you think? Is AI investing at its peak, or is there still plenty of room to grow? Drop your thoughts in the comments. Let's discuss. Don't forget to like this video, subscribe to the channel, and turn on notifications so you don't miss the next deep dive analysis. See you in the next video. Bye.